All right, good morning.
Good morning.
How's everybody this morning?
Wonderful.
It's good to do that twice, right? All right, this morning we have a very special presentation on tax strategies, specifically related to real estate agents. How many real estate agents are in the room? Hey, everybody. All right, good. So this is Janice from the Tax Reduction Institute, and I'm going to let her take it away and tell you all about how to save money on your taxes.
Great. So good morning, everybody.
Good morning.
My name is Janice Nichols, and I'm a teacher with the Tax Reduction Institute. Reduction's the key here, yes?
Yes.
Okay, good. Now let me ask you all a question before we get started. Is there anyone here that's ever given the IRS more money than you wanted to? Is there anyone like that? Okay. I always like to check to see if I'm in the right place. But the Institute is in the area to do a day-long program on tax strategies, but we're going to do three things here this morning. First, we're going to put money back in your pocket via deduction. So in the next 30 minutes, each of you should generate at least $4,000 in new tax strategies that you can start using right away and are overlooking. Two, we're going to help you with your compliancy and reduce the time it takes you to do that because, as we all know, documentation is the key to deductions. And today, without proper documentation, we can be hurt with some pretty stiff penalties, so I'll time enough to give you a couple tips there. Then third, for the Institute, they have asked me just to tell you about the day-long called Tax Strategies for Business Professional. I made it here before my brochures. They promised me they'd be to me on Saturday, but they didn't make it, so don't pay any attention to these dates. But write in December 7th, okay? I have tickets that have the correct date on them. But anyway, and then open your brochure to the very last panel and write in December 2nd. It's going to be at the Atlanta Marriott Northwest Galleria. Does everybody know where that is? I have no idea where that is.
Yes.
Okay. But the normal tuition is at the very top. Pardon me?
December 7th?
December 7th.
7th or 7th?
7.
Oh,
7. Pearl Harbor Day. Isn't that
7.
Pearl Harbor Day?
Pearl Harbor.
Yes. So the normal tuition is at the very top of the page, but do not pay any attention to that number because you're all eligible for a presentation discount. You can talk to me about that at the end of the meeting for those interested.
Can I have a date again? December 7th?
December 7th.
7.
1, 2, 3, 4, 5, 6, 7. The Atlanta Marriott Northwest Galleria.
Thank you.
Yeah, Northwest Galleria. And it's on, and then on the back of your brochures, there's a place to take notes. We will be covering a lot of information in a short period of time. And if you have any questions that come up during, and if you have any questions that come up during the presentation, jot your questions down and hold them till the end. It'll make better use of our time that way. Did you get one? It'll make better use of our time that way because there's a really good chance a question that comes up for you is right where I'm heading. But just in case I do not cover your question, I don't want you to forget it. And keep in mind, nothing that I share with you today will at all increase your chances of being audited. So that's good news already, right? So with that, let's do a brief overview of what we're going to cover today in much more detail in the day long. First, we're going to create information and tax questions for you. Then we're going to improve your record keeping and increase your business deductions. Now, I'll probably sound a little redundant about this documentation thing, but in the case of an audit, what is the most important thing to bring to an audit? Your documentation. Someone said my attorney the other day. I had a guy in Austin say a pistol. But even if you did bring your accountant or your CPA, they would have you bring your documentation. So it is still the most important thing. So we'll give you a couple of tips there. Then we're going to help your accountant help you. Now, our accountants are really an important part of our tax team, but they're only a part. Who gives our accountants the numbers they use?
We do.
We do, don't we? And they count on us because, and we don't want to take the place of anybody's accountant. We encourage you to have good accountants and assume you do, but we want you to work more effectively with them because all the experts tell us if we're not getting a handle on our own taxes and giving our accountants the numbers they need to help us the best with, we're losing money. And independent contractors are notorious for leaving money on the table when it comes to taxes because they don't utilize strategies available to them because they're just unaware. So we'll give you a couple of tips there, okay? And then we're going to open, and then write my name and phone number in this brochure somewhere, would you? My name is Janice, Janice. My last name is Nichols. Now, you can always reach me at this 800 number at the bottom of the brochure, but since I am from San Diego, let me give you that phone number. It's area code 760-522-2494. That's my cell phone. If you have any questions after I'm gone, don't hesitate to call me, okay? Now let's talk about our automobiles, because those are near and dear to all of us. And the IRS says there's two ways to deduct our vehicle. First is the IRS method, which the IRS gives us a mileage rate, okay? So for last year, since a lot of people are still working on their 2016 taxes, my tax day is October 15th. But so for 2016, the rate was 54 cents. It went down to 53.5 for this year. Okay, so that's the IRS method. Then there's the actual method, where we actually track all the money that we spend on our automobiles. We keep track of our gas costs and oil changes, car washes and waxes, tires, repairs, maintenance, licensing fees, your insurance costs, your interest on a car loan, etc. Now, with a show of hands, how many people here are taking the IRS mileage method? Keep your hands up so I can kind of get an idea. Okay, great. How many of you taking the actual method? Okay, good. And I didn't see all the hands. How many of you taking both methods? Okay, good. I'm glad you chuckled. You'd be surprised what I find. But we're going to look to see which we think is most beneficial. Let's say you all drive 10,000 miles a year for business. Now, I know you drive more than that, but I have to do the math here. I have to do the math here. It's easier with 10,000. Times we'll use 2016's numbers. Times 54 cents a mile, that would be $5,400 just for driving our cars for business. Now, I used to think that number was okay, but I can't say that anymore because we did some research. We went to the Automobile Association of America because they actually do studies and track what it costs to operate individual automobiles. And I'm going to give you 3 sets of numbers that you can write down if you'd like. So 75.6, 98.5, and $1.01. Because AAA says to drive a medium-sized car that far at gas at 75.6 cents per mile, that's what your medium car would be. So if you drive in a large car, your cost is right around 98.5 cents per mile. And in a truck and SUV, it costs you about $1.01 a mile. I'll set this for you. So, and so what do you get with the IRS method?
Not much.
Not much. You got that right? So the same 10,000 miles in a medium-sized car, that deduction would have been around $7,500, and a truck and SUV had been around $10,000. So one of our tax tips is to switch to the actual method. There's a couple of you using that method. I think you guys are using the best method, and we'll have a couple more great tax tips for you in a moment. But just remember, when you're talking taxes, and you hear the term IRS method, who do you think it typically benefits?
Yeah.
They've named it well, haven't they? Now, why do you think more people don't take the actual method?
Documentation.
Yeah, they think it's a pain. So we're going to look at it. Because there's a couple things we have to keep track of to take that higher deduction. First, we have to keep track of all the money that we spend on our automobile. We have to save our receipts. But the thing about spending money on our vehicle, aren't we always with our automobile when we're spending money on it? So if you keep a big envelope in your car, every time you spend money on your automobile, the receipt goes in the envelope. Then at the end of the year, you got a piggy bank full of receipts. One more thing we must track before we can take that higher deduction. What would that be?
Percentage of businesses.
Mileage, right? Yeah, and it's either straight mileage for how much you drive your car for work, or the percentage, if you're doing the actual method, your mileage log determines the percentage you can write off all your car expenses, okay? But so we have to track mileage. To me, that's the pain, is the mileage tracking. But the thing about mileage is we have to track our mileage no matter which method we're taking, because if we get audited and we don't have a valid mileage log, we are now subject to a 75% civil fraud penalty, and they can throw out our automobile deduction on top of it. Now, I know that's not good news, but I think we need to know what we're dealing with, because that's worth thousands of dollars to us. So we have to track our mileage no matter what. So we may as well save our receipts along with it and see which one we like at the end of the year best, right? Now, the IRS says there's 4 ways to track our mileage. We'll have time enough to cover a couple here. First is the daily method, where every day, all day long, dusk to dawn, you write everything you do down. How many of you do that here? Anyone? I don't see many hands with that question. I usually see more hands with this next question. However, it's not one of the 4. But how many of you guessed your miles at the end of the year? We got hands. Okay, what's your social security numbers, by the way? Just kidding. Just make sure, though, that those guesstimates are well documented. You do your documentation, so document those guesses well and never admit their guesses because you don't want to get hit with that, right? But the IRS does say there's faster, easier, and less traumatic ways to track. We'll have time enough to cover a couple here. One is we can track our mileage for 1 week out of the month. As long as it's the same week every month, we're in full compliance with the IRS. Little easier, yes? Now, the people that use that method, they'll go through their calendars, and they'll go through all 12 months, and they'll highlight that same week out of every month. So when they get to that week, it triggers their memory to track. Or we can track our mileage for 3 months out of the year. Now, the great thing about that is it can be any 3 months that you choose, as long as those 3 months are consecutive months in a row. They got to be back to back. Then you get a 9-month vacation from tracking. Does information like that make your life a little easier? It's 75% less work, isn't it? But just make sure the months and weeks that you're not tracking your mileage, that your calendar looks comparable with activity in it to the months and weeks that you are tracking. Because they will look at your calendars.
They would if I had.
Oh, of course they would. Yes.
It's like everywhere. Right. It's just like on my phone.
Oh, yeah, well, you sure back all that fun stuff up, you know. But yeah, they will look at your calendar, and you do your documentation, so just make sure your activity looks comparable throughout the year, okay? But this is only one strategy out of 18 strategies on the automobile alone we cover in the day long. We cover lease versus purchase. We cover multiple cars in the family. We're not limited to just one car for business. So if you have more than one car, use them all and deduct them all, because with the actual method, it's worth more money to us to deduct multiple cars than it is just to deduct one. With the mileage method, it doesn't matter because it's just straight mileage. We cover gift leasebacks for older cars that have been depreciated out that you still want to hang on to, so you can now start deducting your automobiles all over again. The 6,000-pound rule and much, much more, because if we do it right, our automobiles are a tax-deductible gold mine, and it all begins with the actual method. Now, how many here knew you only had to track your mileage for 3 months out of the year? No one? No? Well, yeah, and don't feel bad if you didn't know that rule. Not a lot of people know that rule, but I'll tell you, it's not a new rule. That rule has been on the books since 1978. Don't you love how they share the information with us? But I want to take a second because I want to make sure you feel comfortable with this information so you can feel confident about using these strategies I'm going to share with you. So I'm going to take just a little bit to share with you the expertise that goes into this information. We're a tax research and educational organization. We're based in Washington, D.C. We've been around since 1979. We used to speak at Coldwell Banker's Elite Retreats when they used to hold them. And we speak at the NAR conventions a lot of the times, too. And if you'd open your brochures, you'll see that on the front panel there's a partial list of some of our national and regional clients that we've been doing business with nonstop for over 30 years. And you'll see along the bottom of the brochure that we are sponsored by the National Association of State Boards of Accountancy. That means we are nationally accredited and recognized. Now, we do feel it's important to keep you entertained while you're being taught taxes. Could be quite the honor, don't you think? But you're in luck because the seminar moves fast and is really entertaining, and the speaker helps with that entertainment. Now, the speaker, he's a tax attorney and a CPA. Sound entertaining yet? Like watching paint dry, maybe? But you know, you are in luck, and you may have heard of him. His name is Sandy Botkin, B-O-T-K-I-N. First of all, Sandy's got a philosophy: when you're laughing, you're learning. You're not sleeping. And he is one of the top tax attorneys and CPAs in the country. He's on a lot of radio and TV programs. You might have caught him on Fox Business News because he is a tax consultant for Fox. I could go on all day about his credits, but the most important thing about Sandy that you should know is that he spent 5 years as legal specialist in the Office of the Chief Counsel for the IRS, training all the attorneys hired by the IRS nationally. So that's the expertise that goes into this information. And while he was in that position, he got really upset because he realized how much we overpay our taxes and how much the IRS depends on us to overpay, especially independent contractors, because we don't utilize strategies available to us because we're unaware of them. So while he quit the Institute, he quit the IRS and voila, the Institute. And he wanted to make it easy for everybody, so he put all your notes in this workbook that he gives you so you don't have to take a lot of notes. We cover 158 strategies, all based on money you're already walking around spending, and everything is annotated. That means every strategy we teach you, we give you the footnote to the IRS code. So you have no doubt it's legitimate, accurate, and up to date. I'll tell you, sitting down with your accountants with this book saves you money and time, and they love this book because the research has been done for them. My CPA is a high school friend of mine. It took me 4 years to get him to learn this. In the meantime, he would tell me I couldn't deduct things, so I'd show him the footnote. He would always come back to me and go, okay, we'll deduct it. Now he's got his own book. I don't have to take mine anymore, but it saved me thousands. Now, this next strategy you're going to love, and you probably want to take notes on this because it'll put money directly in your pocket, and it'll take about 3.5 minutes to run through. Then I'll have time for questions. Then I'll share with you the presentation discount for those interested in the day long. Then we'll touch on hiring relatives and vacations. But while we're going through this next strategy, just a couple things. Just look to see if you do want to take advantage of the presentation discount. Also look to see if you could use an extra $8,000 in new audit-proof deductions this year and every year of your career. And that is guaranteed. So when you take your clients to lunch, it's 50% deductible, isn't it? And aren't you already deducting that? When you take a client out, you're already writing it off. So we're going to talk about something a little bit different. What happens when you go to lunch with each other? And you split the bill and you just pay your own portion. How do you document that? Or is it even deductible? Well, there's a new rule, and at the Institute we call it the Dutch treat rule. Because the IRS says anything that is over and above what we normally spend in a day is deductible. And that rule also applies to family members and friends because who's a potential client?
Everyone.
The world, aren't they? So let's go to lunch with a family member, friend, or an office associate or colleague. But this time we're going to split the bill and just pay our own portion. We're going to go Dutch treat. So for this example, after we split the bill, our portion is $14. Now we want to subtract our average personal lunch, which for this example is $2. Now I'm going to show you how to figure out what your average personal lunch is in just a second. Because I'll show you. I'm going to show you. Because this is the key to this deduction. Because the IRS figures you're eating lunch anyway. So when you subtract your average personal lunch from your portion, then you get to that over and above number that you normally spend in a day number. Okay? Which for this example is $12. You do this a couple times a week for a year, you have about 100 lunches or $1,200 in lunches, and at 50% deductible, it's a $600 deduction right off your taxes. Can you see the value of this?
Yes.
Now, receipts. What's the rule about receipts? Hold on to them. Well, guess what? We don't have to hold on to them all the time. Write down $75. The IRS says any meal that is under $75, we do not need to keep the receipt for it.
Awesome.
Can you see the value of this now? But they do say we must document it in a timely manner still. By that they mean we have to document within 24 hours after every event, not April 15th with 6 different colored pens. I caught a couple of you, didn't I? I think they're devising this system to see how long the ink has been dry, so I say use pencil. No, I'm making that up. So if you're not going to keep the receipt, all you do is document in your daily planners. Because our daily planners have been held up in court as our proof for our documentation for the IRS. So our daily planners are like gold. 5 things have to be present to document a meal. Whether you're keeping the receipt or not, these 5 things always have to be present to be able to deduct it. First is when, which would be the date. 2 is where you went to lunch. 3 is who you went with. 4 is how much it cost you. And 5 is what you talked about, the purpose for lunch. But you never sit down to a meal without talking business, do you?
No.
It's like Pavlov's law. You see a napkin, you talk business, yes? Now, does every meal have to end with a listing or referral or a sale?
No.
No, it's not your fault your marketing efforts failed at lunch, is it? They just said you needed to talk business, and they don't specify how long you have to talk business either. But they do say you have to be specific on the topic. You can't just say talk real estate, okay? Now, to figure out what your average personal lunch is easy. All you have to do is you just have to track your lunches when you eat by yourself for 30 days out of the entire year. It does not have to be 30 days consecutively. That would be really boring, wouldn't it, if we had eaten alone for 30 days in a row? For example, yesterday you drove through McDonald's, $4. Today, you were too busy. You didn't have time for lunch. You skipped lunch, $0, average $2. Now, you usually don't spend a lot of money when you eat by yourself, do you? That includes bringing lunch from home, 2 pieces of bread and what goes in the middle. Someone told me they top ramen for lunch. I'm like, oh yum, 25 cents for sodium and chemicals. I think Sam's Club, Costco have a Coke and a hot dog for $1.50. If you survive the lunch, then you document it up here. Right? But I'll tell you, my average personal lunch is documented at $1.88. It's easy to keep that number low with your grocery receipts. One word of caution now on these Dutch Street lunches. You probably want to write this in your notes. The IRS allows us only up to 100 Dutch Street lunches per year. No more than 100 Dutch Street lunches every year. But they also allow us 100 Dutch Street breakfasts and 100 Dutch Street dinners. That's 300 Dutch Street meals in a year. Over and above you taking clients out and under $75, you don't need a receipt for it. Can you see the value to this now? Just don't be writing all your dinners down $74.95, okay? It might look a little funny. I like to kid, okay? But you can literally eat your way through thousands of dollars of deductions. I'm just trying to figure out how to deduct the calories now. So when you get that figured out, you can let me know. But I tell you, this one Dutch Street meal deduction to me every year is worth between $4,000 and $5,000, and that's over and above me taking clients out. So, so far, two, I forgot to touch on home office deductions. The rules and regulations on home office deductions relaxed quite a bit a few years ago. They allow most of us now to also qualify for a home office deduction. It is not the red flag that it used to be, and if someone is telling you it's not worth claiming, they haven't run the numbers recently. And now, if you claim a home office deduction within 2 years prior and up to selling your home, you do not have to pay capital gains on the home office portion anymore. You still need to recoup that depreciation, but it's now all covered under the umbrella of the home sale exclusion, which is a pretty big umbrella, yes? Yeah. So it's a good deduction now. So far we've touched on home office deductions. We talked about IRS versus the actual method for automobile deduction. Showed you a couple different ways to track your mileage. Showed you the under $75 no receipt for entertainment rule, not just for meals, it's for all of entertainment. And showed you the Dutch Street meal deduction and how to deduct that. But we're just scratching the tip of the iceberg here. But can you see that your suspicion that you overpay your taxes could very well be true? And would you like at least an extra $8,000 in new audit-proof deductions this year and every year of your career? And that is guaranteed. And could you use a system that in just 2 to 3 minutes a day you'd audit-proof your records? And would could you use an extra $8,000 in new audit-proof deductions? And would it be worth $595? What if it was guaranteed? Open your brochures to the middle panel. You'll see on the right-hand side of the middle panel, the second paragraph from the top where it says your no-risk offer. We say that if you, by the start of a lunch break, you do not feel that you generated at least $8,000 in new audit-proof deductions, we'll give you your money back. So circle that no-risk offer so you don't forget it. And write down $19,400 next to it. $19,400 is an important number because in 2011, we surveyed everybody nationwide who had attended the year before, and out of everybody surveyed, the deductions averaged out for everyone at $19,400. And our money-back offers for $8,000. And I spoke about a discount. You see this third panel tears off really easily, so you don't have to worry about tearing into your notes. And what you have here is a pre-enrollment form. This allows you to invest $595, guarantees you at least $8,000. I would expect more than $8,000, but that's what our money-back offers for. I spoke about a discount. See at the very top where it says $395. Cross that out. I mean $595. Write in $395. That's your presentation discount for pre-enrolling. And remember, write in the dates. That if you're interested in going, the tickets I have for you have the correct date and location on it. But it's December 7th at the Atlanta Marriott Northwest Galleria. And so then when you get this filled out, you tear the top half off and give it to me and get a ticket from me, and then you save the bottom half of your receipt. Now this is a test question. Why would you want a receipt? Documentation. And everything's better when you get a deduction. It's tax deductible, cha-cha-cha, right? So that puts your cost right about, $80 to $90, and it will save you thousands. But most importantly, get yourselves audit proof. Don't let the IRS intimidate you anymore. They work on intimidation and fear. They're pretty good at it, aren't they? If you're audit proof, you can breathe when you think about taxes. Now, any questions on anything so far?
Oh, really?
Yeah, what?
I thought you said to wait till the end.
Well, this,
It's
Well,
not
what-
on this, it's on cars.
on what?
On cars.
Okay, what is it?
Should you lease it?
Well, as a realtor, I suggest you buy. First of all, if you can hold on to a car for 4 years and you drive over 15,000 miles a year, you should always buy. Because you get killed on the back end on mileage. You know? That makes sense?
Yeah, but my CPS is always lease.
What's your mileage of you? Yeah, you're
Way
gonna
more than 15,000.
Yeah.
But if you lease from the same company,
you,
they roll it in. They don't penalize you. I've never paid for them.
oh, okay, well, that's new to me.
She's
I
a
know
very
it.
special person. Because you're special.
No, I'm just good. I'm a good negotiator. That's what that is, Brad.
Any other questions? So how many people here are married? Okay, what's this? Who's not sure? Come on, you asked for this, you get this. I like to kid. I like to kid, okay? So if you have a spouse, hire them. It's worth a lot of money in taxes to you, and they can have a full-time job elsewhere and help you out occasionally, and probably already do. It's segment number 4. There's a lot of strategies you can use when you hire a spouse. It's segment number 4 in your brochure, the benefits from hiring, leasing from, and going into business with relatives. How many have children you give money to? Hire them. But the IRS says they have to be age 7 and above. They can't be 2 months old and drool on your envelopes and go, mailings! I used to do this for my niece and nephew because they lived in the desert and I lived at the beach in San Diego County. Guess who they used to come stay with in the summer? It was hard to get those kids to go home and they were expensive. But they learned a long time ago, if they wanted me out playing, they had to help me work. And I set up a custodial account for them. Every cent that I paid them went into the custodial account. And I gave them their spending money and allowance out of there, but every cent that I spent on them throughout the year came out of their account. They loved to sail, and I belonged to a sail club, so we'd charter sailboats. When we would charter the sailboats, we'd split it 3 ways, and their costs would come out of their accounts. My brother hired them and paid for their private school out of their account. It's easy to do, but you got to have the contract set up correctly. Now you can start college funds and have it be a business deduction. It's easy to do, but you got to have the contract set up correctly, and the going rate for accountants to do that is right around $500. But in segment number 4, Sandy shows you where you can learn how to set them up on your own, so you know they're set up correctly. And he also shows you a way where you can learn how to follow the guidelines to hire 98% of the people you hire as an independent contractor. You don't have to mess with payroll taxes then. You just 1099 at the end of the year. And your liability is a whole lot less. We had a realtor in South Florida years ago successfully sued for $6 million because her assistant she had hired as an employee went out to get her boss her lunch, got in a horrible car accident, and killed a high school kid.
Oh,
Yeah, it was tragic. But they held the realtor liable for her employee to the tune of $6 million. Now, if she had known then, she knows now, but if she had known then how to follow those guidelines to hire an assistant as an independent contractor, she would not have been held liable. So segment number 4 is worth a lot of money. And this year and last year, if you hired a child under 18, you can pay them up to $6,300 for the year, and it ends up being tax-free. Okay, you still have to report the $6,300, but the standard deduction is $6,300, so it zeroes it out. So you can always pay them with the standard deduction. It'll probably go up. If it goes up, it only goes up about $100 a year. So, but for last year and this year, it's $6,300. I don't know about next year.
can you
Okay.
pay them at one time?
What?
Can you pay them at one time? Or does it have to be like a paycheck?
Well, you've got to document. You know what I'm saying? Either you could probably pay them at one time, but you need to keep documentation of when they worked and how much. And you know what I did to figure out, because you got to pay them what's reasonable. Okay, so I called the temp agency and asked them if I hired you to do this, what would it cost? How much an hour? If I hired you to do this, and then I asked them to send me that in writing. and I kept it in a file so I could prove. And then I paid my niece and nephew $1 under what it was saying, so I could prove I was paying them what was reasonable. Now, if you got to keep track of what they're doing and how much you owe them, I don't see there's any. You could pay them only once, you know. But I mean, if they're working for you, they probably want some money, right?
You don't pay it back if I paid him anything.
Now, how many of you are taking vacations and at least writing a portion off? Very good. We have a couple tax strategies. How many of you would like to write all your vacations off for the rest of your career?
A lot.
I should see every hand here, unless you're going, what's a vacation, right? You know, you can do it if you know how to do it and you do it correctly. First of all, vacations are never deductible. But the IRS does say if you're willing to combine a little work with your pleasure, you can now start deducting. But the IRS likes to complicate that. They have 98 pages of rules and regulations for business-related travel, and this flowchart summarizes all 98 pages. Now, which would be easier to use? Take your time now. Whether you're going inside or outside the 50 United States to a conference, a seminar, or a regular business trip, you can use this flowchart and know you're deducting your trips correctly. And you're in a profession, you can practically write off everything you do. You know, agents always come up to me and they say, you know, I always write my vacation. Whenever I go anywhere, I always write it off. You know, and I ask them one question. Do you show your intent before you leave? 99% of the time, the answer is no. Deal's off. You can not deduct your trips. Because the most important thing the IRS is looking for is the intent of the trip. So I like email. Before you go anywhere, email agents in the area. Let them know you're coming into the area. You got clients interested in investment property. You want to meet with them to preview property and sit down and talk about setting up referral business. You can set up referral business wherever you go, can't you? Yeah. And then, you know, print that email out, keep it in a file as a hard copy document proving your intent. Write their appointment in your day planner because that's more documentation. Then come home with your flyers and business cards and keep it in that file. 13 strategies on deducting your trip alone. We show you how to write off 100% of your airfare and your rent-a-car, your food and lodging on business-related days. There's a lot of things you can deduct on a business trip that you cannot deduct at home. For instance, dry cleaning and laundry costs are deductible on a business trip, not at home. So the strategy here is take all your dirty laundry with you. No. No. If you fly Southwest, you can take 2 bags, right? For free. No, I'm kidding. You don't need to take your dirty laundry with you. Because the first trip to the dry cleaner or laundry when you come home from a business trip is deductible, so you don't have to take it with you. But if you're going to start deducting your business trips and deducting them correctly, you need to know what the IRS's definition of business-related travel is. Now, first of all, I've got to warn you, it is a weird definition, but I'm going to share it with you anyway, okay? Just remember, Congress writes these rules, okay? So don't shoot the messenger here. So the IRS says that being able to write your vacation off is being away from home while sleeping in a strange bed while conducting business. You can write your own jokes about that. I'm not touching that one. I'm not touching that. Someone did ask me the other day if they needed to be out of town. Now I don't know what they meant by that. But I did tell them they were beginning to sound a little like my ex-husband, extremely operative. Now, I don't want to take up any more.
That was good.
I don't want to take up any more of your time because I did promise you a short bit. But I do want to share one small thing before we part. So I was in Portland, Oregon about 4 years ago. I did a presentation at the Board of Realtors installation luncheon for about 350 people. And I had a woman come up to me at the end of the presentation. She said the first time that she did this seminar was about 25 years ago. She said she's done it about 3 times since then to refresh herself. But she said about 6 years ago she got audited. And the auditor was going to throw out her automobile deduction and apply that 75% civil fraud penalty that I talked about. Because the auditor told her she couldn't track her mileage for the 3 months out of the year. So the lady goes, really? She had her book with her. She opened up the book to the 2 footnotes and the court case that we have in here that proves you can. So the auditor goes, "Can I borrow that book for a second?" She took the book and left the room, came back in and goes, "Oh, I guess we'll give you that deduction." Like she was doing her a favor. That rule's been on the book since 1978. But most people would have taken that auditor's word as law and thought she knew what she was talking about. So that's why when Sandy quit the IRS, he decided he was going to do his part to ensure that us, as independent contractors, are taking all the deductions that we're legally entitled to. And having the backup to prove it with our accountants, which just saved me thousands with my CPA before he did the seminar, and if we ever get audited. So anyway, for those of you interested in the day long, be sure and fill this out and get it to me and get a ticket. Now, the $395 is good up until the day before the seminar, but what the Institute allows me to do for Coldwell Banker, since we have such a strong relationship with Coldwell Banker, is if you register today, whoever registers today can get it for $295. So it's $295 today, $395 up until the day before. And I just really want to thank you for your generous listening. Thank you so much.
Thank you.